Hello everyone, this is Arvind. I'm happy to see you all in another video. Actually, this is the follow-up video to the forecast video which I shared with you on Tuesday. So before we begin, please note that trading forex and CFDs involves a high level of risk and may not be suitable for all investors. The analysis and opinions shared in this video are for educational purposes only and do not constitute financial advice. Past performance is not indicative of future results, so always manage your risk carefully and trade responsibly. So this week started quietly, but attention quickly shifted to US consumer confidence. This data gave markets an early read on household sentiment and spending appetite. Confidence level helped shape expectations around growth momentum, influencing equities and the US dollar, particularly against safe haven currencies. Wednesday was the key event of this week with the Federal Reserve policy decision. As expected, the Fed held interest rates unchanged, but markets reacted more to the tone of the statement and press conference. Traders focused on inflation progress, growth risks, signals about future rate cuts or extended pauses. This led to increased volatility across USD pairs, bond yields, gold, and equity indices as markets adjusted the expectations based on a forward guidance rather than the rate decision itself. So, towards the end of the week, attention turned to producer price index data. PPI helped clarify whether inflation pressures are easing at the wholesale level, which often feeds into future consumer inflation. The data influenced inflation expectations, bond yields, medium term USD positioning. Markets use these releases to either confirm or challenge the Fed's messaging earlier in the week. So these are the fundamental events that happened this week, which affected the market. Now let's get into the technical forecast, which I shared with you on silver, and let's see how it has developed now. So on the daily chart, we had higher highs. The silver was in a bullish run. The price has created higher highs, whereas the MACD indicator also supported this by creating higher highs. So the daily was bullish. And on the H4 chart too, we had higher highs. The bulls were on the run here. There were no opposite signs. So moving down to the H1 chart, I was expecting pullbacks towards the marked key support zones, which I have marked in yellow. And I expected further continuation higher. Let's see how it has developed now. The price respected the first key support zone and then it moved higher and it created a new high. Actually, what happened here was the price moved higher and created a new high until it was blocked by a bearish divergence. What I mean here is the price created higher highs, whereas the MACD created lower highs. So this blocked the bullish run, and currently, you know, it looks like the bears are in control. So basically, now I expect short-term bearish run. My long-term bullish view still remains the same here. Now moving down to the next instrument, that is GBPNZD. On the weekly chart, we had a bearish divergence. The price created higher highs, whereas the MACD indicator created lower highs, as you can see on the chart. So my view was bearish, especially in the short term. And on the daily chart, we had a bearish divergence as well. And the price has broken below the most recent uptrend line. So we had evidences supporting the bears on the daily chart as well. And on the H4 chart, my plan was to sell retraces. I was expecting pullbacks towards the key resistance zone that I have marked in yellow, and I expected the price to move over further from this zone. So let's see how it has developed now. As expected, the price respected the first key resistance zone, and then it moved lower and provided a nice move to the downside. So these are the technical forecasts that I shared with you and how it has developed now. Until I see you in the next video, it's Arvind Akash signing off. Have a great weekend. Bye.